Hi, everyone, and welcome to this week's episode of Money Moves. Every Sunday, I go over the most important macroeconomic news, and this week's news article is Jerome Powell once again and his comments on the economy. And as an honorable mention for this week, I will very briefly talk about the UAE and Israeli boycott ending, and then I will go over each of my investing accounts, starting with worthy bonds. And then I will go over my taxable lending club account, as well as my IRA with Lending Club. Then I will go over my Fundrise account, as well as one of the most recent project updates. Then I will go over my M1 Retire account, as well as my higher yield savings account. Then I will go over some of my options positions. Then I will finish up with my overall portfolio, and I will go over my weekly tracker. As always, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like owning the new CT6V, or if you just want to be part of a well-educated financial community, definitely like and subscribe. It has a twin-turbo V8 with 550 horsepower and all of the luxury that is Cadillac. It starts at $95,000. To keep your dreams at the front of your mind, like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. The S&P 500 marched up 2.6% with just a little bit of chop in the middle of the week. Looking at the Federal Reserve's comments and convincing the markets it can do what it says it will. The Federal Reserve officials made it clear that they want higher inflation, but the tough part is convincing the markets that they can do it. They've tried to hit 2%, but they've really struggled to do so over the last decade, which doesn't provide policymakers enough room in times of economic stress. The historic shift on Thursday, announced by Jerome Powell, will allow modestly higher inflation for periods of time. This is running contrary to prior policy by increasing rates in order to reduce inflation during times of inflationary pressures. Because of the new approach, markets rallied because they consider the fact that near zero rates will go well into the future, and this helped calm some of the skepticism that the Fed could actually reach its goals. Wayland Investment Advisory said it takes us down a dangerous road because it's clear that deflation is the dominant trend and they can't change that. They mistakenly believe that the tools they have can allow them to implement inflation expectation, and I think that they're wrong. This is probably based on the fact that you can't just give money to people and have inflation. They need to go out and they need to spend that money. If people continue to hoard the money that they're given, prices will continue to fall due to the lack of demand, and hence the deflationary period that we're experiencing right now. Inflation persistently runs below 2% for most of the period since the Great Recession and has fallen closer to 1% during the Rona. Before this recession hit, federal officials had been grappling with low inflation expectations, which they see as problematic because they tend to feed off themselves and create policy problems. Thursday's declaration by Powell represented not only the Fed chair's feelings, but also was endorsed unanimously by the policymaking Federal Open Market Committee. Codifying the goals took the campaign to another level and established a firm policy making the interest rates settling part of the FOMC's job automatic until the inflation rate rises and unemployment falls at least below 10.2%. Peter Ireland from Boston College Economics said putting something in writing after a unanimous vote does mean something. It means the committee agrees, and not only do they agree, but it's down on paper on the Federal Reserve's website, and there can't be any questions on how to interpret this. While the Fed's intentions may be clear, its ability to get past 2% will require additional actions. The investing public will watch coming FOMC meetings for more specific moves on how to buttress the inflation commitment. Among them would be more specific guidance on what parameters would have to be met before the Fed would move on rates. Powell's statements indicated that at least the committee won't set a specific unemployment target. Dallas Fed President Robert Copeland said that he will be looking for inflation between 2.25% and 2.5% before acting. However, it's unclear where all the other officials stand. If we get to next spring and it looks like we've put all of this in the past, at that point we would look to see whether it would start to increase its rates. The problem is there's too many scenarios and too many potential outcomes to really plan effectively, and they need to see how it plays out before they make a decision. Moving on, I want to briefly talk about the fact that the UAE and Israel came together economically. Not going to talk about this very much, but it is pretty historic. It says that the U.S. brokered a deal on August 13th where the UAE and Israel would open up economic relations. However, it did require Israel to stop its plans to annex part of the West Bank. The UAE state-run news agency announced that it would formally end its boycott on orders by its ruler in Abu Dhabi. The new decree allows Israeli firms to do business in the UAE, and it also allows for the purchase of Israeli goods. This agreement creates a roadmap for launching other binational relations between Israel and other Arab countries in order to stimulate economic growth. A flight from Israel took off on Monday, landing in the UAE, carrying U.S. and Israeli officials, which eliminated a law created in 1972 preventing such flights. The law is mirrored by most Arab nations and was said that it wouldn't be removed until Palestinians had their own independent state. Of course, Palestine did not like the agreement, and Hamas, a terrorist group, mentioned that it was a treacherous backstab, which is quite ironic. Overall, I think this is good for the region, and it might unite Israel and some of these Arab nations against the threat that is Iran. Moving on to my investment accounts, starting with Worthy Bonds. You can see here I did withdraw all of my interest for this month, which ended up being around $38, which makes sense because I make just over $10 per week. Looking at my interest reports, I continue to make around $10.26 per week, and my plan for this account is to continue to withdraw that money and move it over to my trading accounts. If you're interested in asset-backed bonds like Worthy that generate 5% and compound daily and are fully liquid, which means you can withdraw them at any time, there is a link in the description that will get you one free bond when you fund your account. Moving on to my Lending Club account, it went up by over $30 this week. And looking at notes in grace period, those went up by 4. The 16 to 30 day late notes went down by 1, and the very late notes went down by 2. The notes in default went up by 3, and then that canceled or canceling note went away, so I'm assuming that money went back into my account, which I then reinvested. Looking at holdings, I invested in A and B note loans for this account, and then looking at term, I'm about 3/4 60-month loans. My weighted average went down 0.02%, but overall this account continues to grow. And looking at my net annualized return, I'm sitting at just over 10%, which is up from just below 10% last week. Looking at my IRA, it went up by $12 this week. I only have one note in grace period right now because one of the 2 notes from last week went into the 16 to 30 days late period. And then these 3 notes in the very late category haven't been paid in a while, so they will probably default in the near future. For this account, I focused on B and C note loans. And looking at the term, I'm getting ever closer to that 50-50 split, and my weighted average stayed right at 17%. I continue to receive a 32.3% return on this account, which is crazy. Moving on to my Fundrise account, I gained around $10 in value this week, and my $500 deposit from last week cleared, which means I'm staying on track for my $650,000 goal by May of 2040. It's currently projecting me to be at $653,000 by that time. Moving on to the progress update for the Denver apartment project. In June of 2018, they invested $2.7 million in a 122-unit apartment building in Denver's Jefferson Park neighborhood. They say it started off slow due to excavation worries, as well as the Rona delaying permits and inspections, but they are pleased to report that the project has since received all the necessary approvals and construction has resumed. The project sponsors says they expect the first batch of apartments to be move-in ready by the end of the year, which is roughly 1 year behind the original timeline. These investments are structured like debt, which means they earn a 10% annualized return until the project finishes and their investment is paid back. The time extension does not affect the returns in any way, and that 10% is extended over the duration of the extension. They say that Walcott, Denver is one of 9 projects they have invested in with Waypoint Residential. They are a Florida-based developer with over $3 billion invested across 22,000 apartments nationwide. And because of this, they have a strong track record of paying back investors, which reinforces the fact that they invested well with them. And then in the FAQs, they reiterate the fact that this is a debt-structured investment, and it's part of the Heartland REIT within the Fundrise platform. If you're interested in investing in a project like this, there is a link in the description that will get your investor fees waived for the first 90 days of your account. Looking at my M1 Retire account for this week, I gained just over $250. And I also invested $25 this week. And you can see my net return was just over 2.5%, which did actually outperform the S&P 500. Looking at the holdings by sector, they basically all went up except for utilities, which went down a little bit, and telecom went up the least out of all the categories. Looking at activities, I had dividends from Royal Bank of Canada, Welltower, and Citigroup, and you can see my investment here at $25. With that money, I purchased some Dominion Energy, Southern Company, as well as Duke Energy. Moving on to my higher yield savings account, it went up almost 1% this week, which is good considering that this account is mostly bonds. Looking at the holdings, all of the bond accounts went down a little bit. Realty income did well. And looking at the ETFs that I hold in this account, they all went up quite a bit. Taking a look at my options positions for this week, I went up 3.87%, despite the last 2 days basically being sideways chop. Looking at individual positions, CrowdStrike continues to go up, and I may or may not close this position before the earnings announcement. Match.com continues to downtrend, but I have about 2 weeks for that to be correct. Simon Property continues to rally. Yeti has been sideways, which is what I want. 3M continues to maintain its position. The NASDAQ continues to rally. And then basically everything else on the chart continued to rally this week. Carnival Cruise, Facebook, AMD, Ford. Apple was basically flat this week, which is fine considering that they rallied pretty aggressively. Amazon maintained, and then Barrick Gold also went up a little bit. Finally here, Uber rallied all week, back up to over $33 a share, and then Microsoft also rallied. Looking at my overall investments, I did break $200,000 invested, but this includes things like home equity. So this is not all liquid, but in total cash, it is just over 200. I continue to raise my percentage invested in stocks up to 43%, and my goal is to get this to a... Looking at my weekly view, as you would suspect, my stocks and trading accounts continue to tick up. My bond accounts are basically flat. REITs went up by just over $100, and Lending Club went up by $65. My cash continues to tick downwards because this was an extended pay period, and I will get paid on Monday. Overall, for this view, I'm at $173,493. If you're interested in any of these investment platforms, there are links in the description that get you some free stuff when you sign up. Comment down below what you think of all of these investments, or if you have any questions. Definitely like and subscribe if you got any value out of this video. Of course, this is all for entertainment purposes. This is not financial advice. And with that, let's get to today's jelly. So today's jelly is the biggest waves ever surfed. And this doesn't need much explanation, so here's what that looks like. These guys are clearly professionals, but they are also crazy. Any single mistake on one of these waves could be life-threatening, and it's incredible to watch them do it. If you want to watch the full video, it is linked in the description. Comment down below what you thought of this video. Like and subscribe before you go, and have a great day.